All right, let's begin the show. And today, to answer all of your queries, I have with me Pankaj Matbal, who's the MD of Opera Money Managers. Pankaj, good evening and welcome to the show. And let's begin our queries session today. We'll take Preet's question today, Pankaj. So he's confused between Miracid Large and mid cap and Bandhan core equity, which fund is better is what he wants to know, and also between HDFC Flexi Cap and PPFA's Flexi Cap. So I don't have him on the phone line, so I have no idea about what's the background of his portfolio. But given the options and the questions that he has asked, what would you advise and what will you recommend him to pick?
Good evening. See, this question is very difficult. The reason is that all the four schemes are good. It's a difficult choice, but still considering few facts, I would recommend two schemes to him. Out of Mire Asset Large and Mid Cap and Bandhan Core Equity Fund, he can consider Bandhan Core Equity. Both are large and mid cap category fund. So Bandhan Core and Equity can be considered here. And out of HDFC Flexi Cap and Parag Parikh Flexi Cap Fund, Parag Parikh Flexi Cap Fund can be considered. Though HDFC Flexi Cap is equally good, only reason because this Parag Parikh Flexi Cap Fund has allocation in international equity. So in case, I don't know much, means he needs that exposure or no, but if he wants a diversification across the sector, and in addition to that, he's also looking for geographical diversification in that case. Parag Parikh Flexi Cap Fund can be a better choice. Otherwise, as I mentioned in the beginning itself, all the four funds are good. So right now, the combination of Bandhan Core and Equity Fund and HDFC, and another one is Parag Parikh Flexi Cap Fund.
All right, let's move on and let's take Ramakrishna's question. And he says that he is 40 years old and moderate risk taker. Investment horizon for his investment is 15 years. The retirement corpus that he wants to accumulate is around 5 CR. And the portfolio that he has is Mid Asset Large Cap 10,000, Kotak Nifty Next 55,000, Kotak Emerging Equity 15,000, and Nippon Small Cap 15,000.
See here, if I consider 12% CAGR, so in 15 years, he can expect around 2 crore 14 lakh rupees. So if he wants to achieve this 5 crore in 15 years, he has to increase his investment by 15,000 every month. Means he's right now investing 40,000 rupees. He should increase by 15,000 per month. And then along with this 10% step up every year. So if we expect 12% CAGR, he can achieve his target in 15 years. Second thing, see, scheme-wise, he has good scheme. Only thing that he can increase his SIP amount if he wants to increase, as I suggested, in Kotak Nifty Next 50 and Kotak Emerging Equities Fund. So two schemes which are already in the portfolio, he can top up them.
All right. Let's take Rajesh's question. This is also via email, and he says that he has saved about 4 lakhs over a period of time now, and he wants to invest in equity for almost 10 years. He wants to know what should be the fund selection to invest these 4 lakhs, and what should be the corpus that he should expect after 15 years and in 10 years. So 5 years and 10 years basically. And he's a moderate risk taker, and the goal is so far to have wealth creation, and whether he should be going for direct funds or regular plans is also what he's seeking advice for.
Because see, first question is that schemes. So considering that he wants to invest lump sum amount at this moment, so large and mid cap or hybrid funds can be a right choice. So ICICI Prudential Multi Asset Fund, Motilal Oswal Large and Mid Cap Fund, Bajaj Finserv Balance Advantage Fund. These can be the good choices. So hybrid funds and one large and mid cap fund I have suggested. In hybrid, one is multi asset allocation and one is dynamic asset allocation fund. So these three funds you can invest. Again, do not invest in one lump sum in one day. You can take the benefit of STP through systematic transfer plan. You can invest the money from the source scheme to the target schemes in in 3-4 months, 4-5 months, you can invest the whole amount. Second thing, as far as target is concerned, see, if I assume this 12% CAGR, In 5 years, around 7 lakh can be expected. And in 10 years, around 12 lakh can be expected from the investment of 4 lakh rupees. Second thing, the question is whether regular or direct plan. See, if you have knowledge about mutual fund, about the capital market, and you can do rebalancing in your portfolio whenever required, you have access to research, then you can go for direct plans. But if you need some guidance, you need some service of a distributor, in that case, I think that regular plan will be a better choice.
All right. Let's take Shankar Gowda's question. And okay, so he's investing 10,000 in 5 funds divided. Nippon India Large Cap, Parag Parikh Flexi Cap, Motilal Oswal Mid Cap, Nippon India Small Cap. He says that he will step up his SIP by 10% every year. He's planning to add HDFC Balance Advantage and SBI Contra, 2,500 each. So total over year is 5,000. Are these funds good for him? Apart from what he's doing already. And okay, so he started his investment in August 2024, and he's been also investing for his retirement. NPS 1 lakh rupees with HDFC Active Choice, and max exposure to equity and PPF is almost 50K. All right, so the current corpus is almost 19 lakh, and all of these retirement investments are specifically for retirement only. 2 CR is what his target is for retirement after 15 years. Is that sufficient for him through PPF, NPS and EPF is what his question is. This is from Shankar, Bangalore.
There are two things. One is a mutual fund portfolio. In a mutual fund portfolio, what he has right now, he has been investing for quite some time, around 54,000 he has accumulated. And plus SIP, what he has been doing right now, 15,000 per month, 10% step up, what he's mentioned. If I calculate with this, in 15 years, around 1 crore 27 lakh can be expected. So that is about mutual funds and scheme also what he has, right? But what he mentioned, SBI Contra and SDFC Balance Advantage Fund. Because the horizon is long here, he wants to invest for 15 years. SBI Contra Fund can be a good choice in the portfolio, but SDFC Balance Advantage Fund he can skip. The reason is that he already has good allocation in debt, so he should increase his exposure in equity only. In that case, I think that SDFC Balance Advantage Fund he can skip. Contra Fund he can add. And yes, one more thing, because as he has already equity funds in the portfolio and he wants to increase by 5,000 rupees, as he mentioned. So 2,500 can be invested through SIP in SBI Contra Fund. Balance 2,500. My suggestion would be that 1,000 rupees he can add to Motilal Oswal Mid Cap Fund and 1,500 to Nippon India Small Cap Fund. So in existing funds only, he can top up that amount. Only one SBI Contra Fund he can add. Regarding his retirement portfolio, see, first thing I'll mention very clearly here. See, if somebody is planning 2 crore rupees after 15 years, if we assume 6% inflation, the value of 2 crore today will be around 83 lakh after 15 years. So one thing, whenever you target for long term, you should factor in inflation in your planning. That is very, very important. Second thing, see, about EPF, he does not have a choice. That is a mandatory contribution from your salary. About your NPS, I'm happy that you have selected the active choice and you are investing maximum in equity. But as far as EPF is concerned, my suggestion would be that for 15 years, instead of investing a large amount in EPF, you should increase your contribution in NPS, or you should increase your SIP amount, because PPF is a good choice as far as return, as far as that safety is concerned. But in long term, I feel that equity has potential to deliver better returns compared to your PPF account.
Sure, I think you very well elaborated on all the aspects of his queries. We just don't have Shankar on the phone line, but I hope that he got all the solution for his queries. Pankaj, it's time for a quick break, and for all the viewers who are watching us live right now, if in case you want to send across your questions, you can do that on our WhatsApp number and email ID. More viewer queries after this break. Welcome back. You're watching The Money Show, and I have with me Pankaj Matpal, who's an expert on the show today and answering live financial portfolio queries. And Pankaj, let's move on and let's take Mahesh's question. He's doing SIP in Parag Parikh Flexi Cap, HDFC Midcap Opportunity, Mirasit Emerging Equity. He's got Axis Small Cap, Nippon India Small Cap, HDFC Balance Advantage, and total SIP is 25,000 per month, and he will step it up by 10% every year. In terms of financial goals, he's lined up child education, 18 years old, 2 CR needed for that, and retirement, 4 CR after 20 years.
Kavita, if again I assume 12% CAGR in 18 years, he can expect around 3.40 crore with his SIP of 25,000 rupees plus 10% step up. Uh, as he needs 2 crore rupees for child education, if he withdraws 2 crore out of this 3 crore 40 lakh rupees, and the amount what is left, and along with that what SIP he'll be doing that time, still means if he increase it, he's expected to achieve his goal with this, because as he mentioned, 2 crore rupees he need this, and retirement 4 crore rupees. So that is possible. And schemes are also good here. He doesn't need to make any change. If he wants to add any fund here, I think there is no scope because all the funds are good. He can top up if required.
Okay. Let's take Gauri's question now. And Gauri says that she has Parag Parikh Flexi Cap, she has Motilal Oswal Large and Mid Cap, White Oak Capital Multi Cap. She's got ICICI Pro Blue Chip, investing 25,000 via SIP in each of these funds from last 6 months. And she wants to know if she can add a small cap in this. And she wishes to continue her investments in mutual funds for next 5 years only.
See, one thing through this multi-cap fund, she is getting exposure to small cap. Second thing, because the horizon is only 5 years. So at this point of time, my recommendation would be that somebody should have allocation more into flexi cap or large cap. So you can skip at this moment small cap, and the funds which you have in a portfolio all are good. If you want to top up, better you top up these existing funds on.
Okay. So just in case you want to top up, you can be topping up in this portfolio only. That is the recommendation. Let's take Jawahar's question. That will be the last question of the show also. Okay, so we have, he says that he has Parag Parikh Flexi Cap, Axis Small Cap, Kotak Emerging Equity, JM Flexi Cap, and Navi Nifty 50. Okay, so he's a long-term investor and he wants to add 2 more funds in his portfolio. Would you recommend that?
See, again, if you see here, he has large cap, mid cap, small cap, and like GM Flexi Cap Fund is also a well diversified fund which has investment across the segments. So there is no much scope of adding any new fund. Just one value style fund can be added. So ICC Prudential Value Discovery Fund you can consider. In addition to this, I don't think there's a need to add any fund unless you'll have a duplication in your portfolio. If you want to increase the amount, you have good funds like Parag Parikh Flexi Cap, Kotak Emerging Equity, JM Flexi Cap Fund. In these funds only, you can add amount.
All right, so that is a recommendation for Jawahar also. And it seems people being long-term investors, they can be invested well in equity. But within that, if someone has a time horizon, like we saw Gauri having a time horizon for 5 years, what kind of risk mitigation you should be taking care of or looking at, Pankaj?
We know that small cap has the risk of volatility more than large cap. So if the horizon is longer, definitely you should have investment in small cap. Though in long term, definitely you should have investment across large cap, mid cap, small cap. But as I mentioned, there is a uh, uh, higher volatility is expected in short term. So that is why my suggestion is that one should um, avoid adding small cap for short term. That's the only reason. But still, if somebody wants to take a higher risk, somebody wants a small exposure, can be considered. Right now, if somebody wants to invest in lump sum or through STP, in a short duration for 4 or 5 years. Means you are doing STP of 4 or 5 months, and then you want to stay invested for 4 or 5 years. Large and mid cap fund, flexi cap fund, multi asset allocation fund can be a good choice. So your objective of investment, risk appetite, and investment horizon, these are some main factor one should consider before making the choice of schemes.
Right. Let's take Anil Kumar's question. I think he sent us this question via WhatsApp while watching the show. And Pankaj, he has Quant Small Cap, 1,500 SIP going on. Parag Parekh Flexi Cap, again 1,500 SIP going on. SBI Large and Mid Cap, again 1,500 SIP going on. HDFC Balance Advantage Fund, 1,000 rupees. And he wants 1 CR in 15 years. So Quant Small Cap, Parag Parekh Flexi Cap, SBI Large and Mid Cap, HDFC Balance Advantage.
First thing, as far as target is concerned, if you want to accumulate 1 crore in 15 years, it means your SIP amount should be something 20,000 rupees per month. If we assume a CAGR of 12%. So you will have to increase your SIP amount. That is the first thing. Or second thing, that if you do not want to start or do not want to increase right now, step up method helps you accumulating a bigger amount in the same period. So that you should do. Second thing, schemes are good because he has investment in flexi cap, and through flexi cap, allocation is in large cap. Large and mid cap fund is there. But SDFC Balance Advantage Fund is a good fund, but as it has allocation in debt and equity. So if you are a person means who is comfortable with volatility and your horizon is really long, as you mentioned, I suggest that you can even go for a pure equity fund instead of a hybrid fund. Otherwise, choice of fund is good.
He also says that he's from army, so I would really like to appreciate the fact that he is being aware and very conscious about his personal portfolio. But in terms of insurance and what else would you want to recommend? Because see, a lot of things are already taken care of for defense personnel, and when we talk about insurance specifically, they are covered. We talk about pension, they already have it. So when we talk about these kind of investment and additional insurance coverage, what are the pointers that are coming to your mind?
See, if you talk about complete financial planning, and definitely one should consider health insurance as well as life insurance. As you mentioned that mostly they are covered through the group insurance through the government of India. But still, if required, one can consider health insurance, and because family is dependent, so whatever money you get in case of untimely death, in addition to this, if you feel that your family will require more financial support, then term insurance can be a good choice. Though many companies they do not offer term insurance policies to the defense personnel, but still, wherever possible, and if you are young, you should definitely try for that. Term insurance is one thing which I always recommend to everyone who has family where you feel that they will need the financial support in case you are not available. So that is why with the insurance you should plan, and then comes to your financial goals. As you mentioned, um, even retirement planning, because pension is available, but because we know that with time, uh, because of inflation, the value of money decreases. So if you plan additional amount for your future financial goals and your retirement, so it is always a good choice.
All right, I think that will be all on the show today. Thank you so much, Pankaj, for being on the show and helping our viewers with their portfolio queries. And time to sign off. For the viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.